Hi friends, welcome to my channel InfoCraze. In today's video, we are going to check some basic accounting terms which are very important for students and beginners in the field of finance and accounts. As you will come across these terms quite often in your accounting journey, it's crucial that you have a clear understanding of these basic terms. Before we proceed, request you to subscribe to my channel for many more informative content like this. Now, let's get into the world of accounting together. Let's start with the most basic term. What is a transaction? In accounting, a transaction is an event or business activity which can be measured in terms of money, leading to a financial impact on the business. It involves exchange of money or money's worth between parties. If you look at the definition closely, you will notice that the two key words are business activity and financial impact. Business activity or event should have a financial impact on the business which can be measured reliably. Every transaction affects at least two accounts due to double entry accounting system supported by a source document. For instance, a transaction for the purchase of an equipment in cash would decrease the cash account and increase the equipment account, which is supported by a purchase invoice. Transactions are the basis for recording and reporting of financial activities and may be classified into two broad types. 1. Internal transactions that occur within the organization, such as depreciation of assets, allocation of costs, and usage of supplies. Number 2. External transactions that occur between the organization and external parties, such as sales, purchases, loans, and payments. Key elements of a transaction include date, specific date on which the transaction occurs, accounts involved, specific accounts affected by the transaction, example, cash, accounts receivable, inventory, etc. Amount, monetary value of the transaction, description, a brief explanation of the transaction's nature. Hope you have understood this term. Now let us get into the second one. What are goods and services? Goods and services are the two categories of products that a business provides to its customers. Goods are tangible items that may be bought and sold or manufactured and sold. These are physical objects that can be seen, touched, and measured. Examples of goods are consumer goods, like items purchased by individuals for personal use, such as clothing, electronics, furniture, food, etc. Then we have the capital goods. These are used by businesses to produce other goods or services such as machineries, tools, and buildings. Raw materials, basic materials used in the production of goods. On the other hand, services refer to the tasks or activities performed to satisfy any need or fulfill a demand, which may be provided by business organizations, government, or individuals. These are intangible activities or benefits that are provided by one party to another. The recipient of services do not get the ownership of anything physical. Example of services are professional services like expertise provided by professionals such as lawyers, doctors, accountants, and consultants. Then we have the business services, services provided by businesses towards advertising, cleaning, and maintenance. Then we have the public services, services provided by the government such as education, healthcare, and public safety. So these are just few of the examples of services. There can be many more examples. If it is clear, let's get into the third one. What is revenue? Revenue is the total amount of money generated by an organization from its normal business operations. It refers to the income earned by business from the sale of goods or services to customers. Revenue is a key indicator of a company's financial performance and often referred to as the top line of the business. Let us discuss some key aspects of revenue. It includes product sales, revenue from selling physical goods, service revenue, which is revenue from providing services. Then we can have other revenue sources like interest income, rental income, dividend income, etc. Let's now discuss the fourth one. What are expenses? Expenses refer to the costs incurred by a business to operate and generate revenue. Proper management and tracking of expenses is crucial for maintaining financial health and ensuring the profitability of a business. Based on the nature and purpose of expenses, they are broadly classified as capital expenses. The nature of these expenses are long-term investments, and the purpose is to acquire upgrade, or maintain physical assets or investments that provide benefits over an extended period. On the other hand, we have revenue expenses. The nature is short-term recurring costs. Purpose: these expenses are aimed at generating revenue and maintaining the business operations. Next, we have profit and loss. Profit is the financial gain that remains after subtracting all the expenses incurred from the total revenue generated within a specific period. It is a key indicator of financial health and success for any business. Mathematically, profit can be expressed as profit equal to total revenue minus total expenses. Loss is the opposite of profit. It is defined as the financial deficit that occurs when total expenses exceed the total revenue generated during a specific period. Managing losses is critical for financial sustainability and ensuring long-term viability of any business. Mathematically, loss can be expressed as loss equal to total expenses minus total revenue. Now we have asset. An asset is a resource with economic value that is owned or controlled by a business or entity with the purpose of using it for generating future benefits. Assets may be broadly classified as tangible assets. These are physical assets that can be seen, touched, and felt, like plant and machinery, furniture and fixture, etc. Then we have the intangible assets. These capital assets have no physical existence but still hold value for the business, like goodwill, patents, etc. After this, we have liability. A liability is a financial obligation or debt that a business or entity owes to another party. It is a present obligation arising from past events, the settlement of which is expected to result in an outflow of financial resources. For example, when goods are bought on credit, an obligation is created for payment to the supplier on an agreed future date. Another example, when a loan is taken from bank, an obligation is created to pay back the principal amount along with interest. Based on the entity or individual to whom an obligation is owed, liabilities can be classified into external liabilities. These are the obligations owed to external parties. Examples are accounts payable, that is, money owed to the suppliers for goods or services purchased on credit, or loans and borrowings from banks, financial institutions, or other lenders. We have the internal liabilities also. These are the obligations owed to internal stakeholders such as shareholders and employees. The next one we discuss here is capital or owner's equity. The amount invested by owners in a business is referred to as the capital or owner's equity. For corporate bodies, this is normally represented as the share capital. It remains in the business for as long as the business operates, serving as a measure of the owner's stake in the company. However, there are specific circumstances when changes to owner's equity occur, including settlements. It represents the owner's residual claim on the company's assets after all the external liabilities are settled. Hope you have understood everything that we discussed today. I will discuss more accounting terms in my future videos. With this, we come to the end of this video. If you find this video useful, please like the same and share it with your friends. For additional information on accounting, you may refer to my earlier videos on accounting basics as provided in the end screen. Please subscribe to my channel for many more interesting videos in the field of finance, accounts and costing. If you have any question, please leave your query in the comment section. Thanks for watching.